U.S. futures are down big. Spain has a new government, but 10-year borrowing costs are still climbing towards 7%. The Super Committee fails to slash over $1 trillion from the U.S. deficit over 10 years, and Hewlett-Packard is now in the hot seat, reporting earnings after the closing bell. I'm Alix, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call. Scott, let's get to it. U.S. stocks are looking to open down big today. What's the line in the sand? We have been looking at that 1220 level for support. We are well below it now. What's the next level?
Next level that I'm watching right now is about 1187 to 1192. And for those that last week sold their longs or got loose or even got short once that wedge resolved to the downside, you should be coming in today pretty excited, because you shaved yourself about 50 handles, you followed your rules, and this area is an area that macro longs probably have to come in and try and defend. I know momentum players like myself, guys that traded trend, they got stopped out last Wednesday, as I stated in my note. So today, if that's you and you're coming in flat, there could be some opportunity in this area if they defend it.
What's the line, though, in the sand? Is it that 1180 line that if we go below that, then all bets are off and we'd be going bearish right now?
Well, there's different lines for different people because everyone has different time frames. If you look at a chart at the S&P right here, you will see, for me, just a quick dissection, this was that low, this was that line in the sand back here before the move to 1292, which was the upper end of the target, and then you had this wedge formation. For those trading momentum, those trying to stick to this for a potential break to the upside, here was your line in the sand. I got out right here when we broke this 3-day pivot. I said, I'm not sticking around, and I actually cheated to get out a little early, but then look where we closed. So those that saw us close on this little rising uptrend were either on their toes or out, and then on this day, you got out. This was about 1235. This was really important. And now, for guys who trade longer term that weren't looking to be so tight, they better watch this area, because this is the area that held back in early October. This area, I think if they could reverse it here around this 1190 zone, perhaps maybe with some sideways action, a little bit more clarity from Europe, a little bit more clarity from Washington, which is a lot to ask for.
A lot to ask for.
Maybe it could be a bit constructive, but for right now, just watch that zone today.
All right, so if you're going to look for some stocks and some levels to go long and just sort of dip your toe in the water here, how are you going to protect yourself? Because I think the biggest worry, because the Super Committee didn't come up with any kind of big solution to reduce the deficit by over $1 trillion, is that we'll get our rating cut again. And if you look at the S&P on the Monday after the S&P cut our rating in August, we're looking at a over 6% decline.
This is true. So at this point, you have to just trade what you can handle, trade within your means, live within your means, all these zones. For me, on that Wednesday, I said I'm no longer holding multiple positions. It's been a nice 6 to 7 week run. What I'm going to do is trade levels versus a level for cash flow until I see a new setup, see a new day one, a new follow-through day on 4 through 7. Until we see that, there's no need to be a hero at all. If you remember, we said gut check time last Wednesday. I would tell my son on the football field, you play to the end of the game, you play your heart out, and if you lose okay. In the market, you don't have to do that. It was gut check time. Once we broke the level, you tidy up, you live to fight another day, because you don't have to be a hero in this market. All you need to do is protect yourself and be comfortable.
But you can't protect yourself right now. I mean, you can't initiate some shorts at these levels yet.
No, at this point, hopefully you got rid of some of your longs, you sold some in the money calls, and you're pretty protected. If not, you know what? You have to watch real closely, and if you're jumping out of your skin, maybe you do sell some here, and if we rally up, just accept it. Know that you made some poor decisions, and you're going to look to educate yourself to put yourself in a better position moving forward.
All right, so let's see where you might be looking to go long in certain areas. Want to hit on retail. Has been holding up really well, but I have to say, expectations are very high headed into the holiday season. We got some really good earnings from some solid retailers, but I read a pretty, I'm going to say bearish note from Bank of America Merrill Lynch over the weekend that said that real consumer spending is up to 2.4% in the third quarter, quarter over quarter, but real disposable income actually fell almost 2%, which basically means people are dipping into their savings. If they decide to actually keep saving and not spend, we're looking at a big shrinkage in terms of retail.
It could be, and a lot of analysts have been saying that for the last few years, and at this point they've been defied. So at this point, again, you're at a crucial point where retail still looks okay. I don't like the fact that it's the crowded area that everyone's watching. They're going to measure every little footstep of every consumer. They're even talking about opening up the stores, at 10 o'clock Thursday night?
Yeah.
I don't know about you. I'm not going shopping after eating a big turkey, drinking a lot of wine, and spending time with my family to go out and shop on a Thursday night. But anyway, some people do.
Just if you have to work on Friday.
Exactly, and I have to be in early. So retail, RTH, you look here at this chart, still look how close it is to the highs. It just broke a small level where I talked about if you're a momentum trader, maybe you sold here. I would think for a macro trade, for something to be constructive, it could hold this 107.41. It's still above the 50-day, so this is still showing strength. So you can't abandon this until it starts to fail and starts to break the moving averages. So for now, stay with it, but have one foot in the door, one foot out the door.
But know that there are some concerns out there that you need to pay attention to.
Definitely.
Let's go to oil. So ironically, one of the issues now for retailers, of course, is high oil prices, that perhaps WTI will now start tracking Brent and rise. Are the OIHs, or the oil services, showing that kind of strength?
Two things. First, with oil had that climatic type of top on Wednesday. I talked about that in the recap, because on the virtual floor you saw that I was long SEO, which has been short oil for the last few days. And look at this move in SEO. You could actually make money when things go down. It doesn't look like much, but this was 8-9%. Okay, if you look at the USO, which is oil, it gapped up and then it lost momentum when it filled this gap. This was one of those don't chase excitement gaps up in oil. So if you go to the OAHs, you saw a pattern here where you could have saved yourself some money, because this was a group I was trying to stay with. I was long a majority of these stocks on that Wednesday, and then it pushed through and failed. Wasn't a complete failure. So at this point, you had to get out of some. If you didn't get out on Wednesday, once it broke this wedge, this tight apex, this was your way out. So now you have 2 down days coming into bigger support. I would say watch this 116 area potentially. You could buy some back here if you sold into the strength. This is a nice $10 to $12 move down in the OAHs, but this will be the level to watch, because this was a strong group while oil was making a strong move.
It also depends on what you believe. Do you believe the Brent prices are going to come down to WTI, or the WTI will rally to Brent and then they'll keep somewhere maybe in the 100, 105 level, now that we're getting that pipeline reversal and getting more WTI out into the global economy? So
that's a little bit above my pay grade. All I want to do is short 102, cover 97. I'm done with the trade. We'll see how it goes from here.
Okay, anyway, all right. So let's get to a couple other sectors. Want to go to industrials and transportation to see how they're holding up and see what kind of pressure or support that they'll help lend to the markets. Okay,
so let's look at the XLI first. Let's see if there's any relative strength or weakness. Take a quick look here. This is still hanging around. Okay, it's still above, I would say, what is this, the 50-day moving average? So on a macro level, this still seemed fine. On a micro level, it couldn't break above this resistance that guys like me would have loved to have seen. And now, so I would say watch this 31.85, 32 level. If it holds it, I think it's okay. Just the ascent higher is going to be slower. The momentum is out of this trade.
How for transportation? Where's that line in the sand, the IYT?
Let's take a look. That was looking good for a while also. So if you look at the IYT, looks very similar. Not falling apart the way the spiders did. It didn't fall apart the way some tech names did. So it's still above the 50-day. Watch this 50-day moving average. It's at 83.05. As you can see, it's still above the 50-day as the S&P is opening below it. So the industrials, the OAHs, and the transportation section are all stronger than the overall market right now. So keep that in mind.
And then really want to check in very quickly with the SMH, because we're going to go into some high beta tech in just a minute. Are they also holding up as well?
SMH has been the nuts and bolts of tech, holding up better than some high beta names. If you look here at the SMHs, you will see. Again, this kind of like the OAHs tried to break out that Wednesday, but couldn't go without the market. Once it broke this mini flag, this was your way out. It's hovering on the 50-day. I would say, watch, make sure it holds above this 29. And I just want to show you a quick chart of Intel. Intel, I think there's an important level. It couldn't break out. I still think you can go to this name with the dividend, with the low PE, but I think you could buy this a little bit closer to about 23.25 to 23.50, right at the 50-day. That should hold.
All right, and we will have a snapshot of high beta tech and how to trade those right after this.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
As promised, we're back with high beta tech. Scott, want to start with Apple. When I was doing the show with Evan on Wednesday, he was saying that's the stock he looks at to really get a proxy of the market. I know you've been looking at it too, but it's behaving very poorly.
It's been behaving poorly even before the market started, so that has been a leading indicator. I was on Street Science talking to Brian Sullivan, and I said, I see at least a move to the 200-day moving average around 362 if it can't get back up in that box. So if you look at the chart here, you will see this was the box that we were talking about. Couldn't fill this gap. This was your island top. We mentioned that for technicians, very important. Once it broke this 395, this was your short point. Came down, retested, failed. Now it's opening right near the 150-day. So today, I'm going to watch this. I'm going to see if it could hold this for a cute long. You know, if it can't hold this and shows relative weakness, then I'm definitely going to be watching this 200-day. At this 200-day, you should be able to get some type of cute trade, cute long, who knows, you know, trying to be cute. But that should hold the first time because there's a lot of people that need to defend this stock. The whole world is long Apple right now, and they're all, you know, they're all shaking a little bit and a little scared for the first time.
And also I think that in particular Stephanie Ling, Director of Research for The Street, who owns Apple for Action Alerts Plus, says that 160 she would definitely be a buyer, which means that there are a lot of like long portfolio managers, like you said, who want to go buy at 360. So that is definitely the important level to watch.
Yeah, so for me, who's coming in flat, who got rid of the momentum shares and went short, made some cash out, I'm very excited right now that I might have the opportunity to buy it around the 200-day, especially if it holds and gives you a little reversal through there and closes with a nice technical buy signal.
And then Google, you know, under 600, has the tide now turned for Google?
Google, as a momentum stock, you have to value momentum. It went above that 602, gave us a good trade. But to trade momentum, you have to stay with it until it leaves. And once it broke back below 600, you had to get out of the way if you're not a long-term holder of Google. So now you got to look at the chart and see right here. Okay, this was when it broke above that 602. Tried to hold higher, couldn't. This was one sell signal. Then it closed in the low. So now look to see if you could buy for buy on support for them to protect this earnings gap, and that's right around 580. Still above all the moving averages, still showing relative strength. But for a trader, 580 to 578 is the new line in the sand if it's going to be constructive at all.
And what about Amazon? Really got hammered on Friday. I mean, I think the retail season is probably going to be a little dicey for Amazon either way, sort of valuing sales versus profits. I mean, they're offering free shipping. I think that might be something to pay attention to, especially with oil prices sort of on the rise here. What do you think about the stock?
I also think I read that their new product, they lose like $1 on every one of them.
The Kindle Fire, the tablet?
So what kind of profit margins do you have there? But as well as all those fundamental reasons, technically you had that earnings miss. It held at 200-day, went in the penalty box. We talked about it for investors. If you're holding it, you're in the penalty box. For traders, is cash flow. And Amazon, for cash flow, broke to the downside once again. I know guys were watching it to break this like 210 area. It couldn't get in the gap right here, broke it, 3 days of downside momentum. It now closed below the 200-day. So the next real area to watch is down here. Actually, a little area right around this 188 to 190. And then
that's pretty grim, though, for going to the 200-day, right?
Yeah, that means institutions did not protect the 200-day. Sometimes they do it as a trap where it'll close below because it gets stopped out, so you have to see if it regains that real quickly. If it doesn't, it's in serious trouble. But I see a 190, and then you see about 178 here on Amazon.
All right, and then BIDU also really getting hammered here. It's like 3 days of a potent down day for BIDU.
Yeah, at this point, you know, as investors, we say that that's one of the riskiest of the high beta names. It's the Chinese name. They do have big growth, but with high risk comes high reward. Or with high reward, vice versa. Anyway, it got hit pretty hard. So in order to trade BIDU, you have to be able to read these charts and be very flexible. And as you can see here, this also had a tight little wedge and broke to the downside around 135. Next real level to watch is probably in this 120 zone. If you're short, congratulations. I would be covering on this down open. And for longs, maybe get a cute little long around 120 if you could hold it.
And then IBM, wrapping this up, was the leader of the group, you know, near those 52-week highs, has that dividend protection. Is it still showing juice as a leader?
Yeah, and let's hope that Buffett comes in and buys a little bit more today. You know, but this stock is one of those stocks that you should look at on the daylight today because it's got growth, it's got dividend, you know, it's technically well, so maybe it goes from negative to positive. In a stock like IBM can't go negative to positive. That's going to give you some signs that this market is not going to recover at all today. So if you look at the chart right here, I would say watch this 180 level. This is where the one of the important moving averages coming in, the 50-day. So if it does open and hit here, perhaps you could buy some on this dip right around 180, and then the huge level I would say is about 173. But if we get here, this market is not holding in well at all.
All right, we have a few stocks you need to pay attention to, possibly some good trades. Hewlett-Packard is reporting after the bell. Now it's keeping its PC business. A lot of pressure on Meg Whitman here, the new CEO, to deliver a strategy for Hewlett-Packard, especially for its PC business. There is a sort of lack of organic revenue growth coupled with cost cutting, so there's sort of a question of what the margins will look like and how real those margins will be. Are you trading or looking at the stock at all?
Not really.
Okay.
I just think it's very complicated. It's been a laggard. It's been hard to figure out. A lot of people lost a lot of money. I'm looking at it right here. If you take a look at HPQ, it's already had a move off the low. So it's not like it's at the dredge lows where they might price it in if it's bad at all. It's already come up, you know, about $5 off those lows. I would say if it's not impressive or if they don't have a plan and it starts to break this 26 area, it could move right back to those lows. So I think at this point, you have to be very careful with this. Even though it looks cheap, it just had to move and it only filled half of its gap.
All right, and staying with tech, let's go to LinkedIn. IPO investors can sell their shares today. What does that mean?
It means that a lot of people that are trying to get their money out, that want to protect some gains, they might.
So we're looking at a big sell pressure here?
It could be. Sometimes, you know, some of these guys sold in the money calls. They did it other ways to hedge it, and they don't sell that day because they do have longer-term commitments to the stock. So everyone that tries to be short and be queued and short into this type of lockup, sometimes they get really paid and sometimes they don't. So I would watch this level. This is pretty big for LinkedIn. This is 70. This was your momentum area to sell right when it broke this 85, but this is longer-term support. Under 70, then you have the lows that was put in when these IPOs down at $60. So those are your two levels.
Be careful of shorting on that news, though.
Yeah, I think some of the juice is out there.
All right, so let's go to MasterCard here. Financials were the worst performing sector last week, over down 6%, but MasterCard held up pretty well. Would you be using this?
This is one of those strong stocks that you want to see if anything can go positive. Question is, sometimes in weak markets, strong stocks play catch up to the downside.
Right.
So if you want to look at the chart right here, let's take a look at some levels. You know, right now it's on a bit of a perch. So if it doesn't hold this 355, there's no reason why it can't get down to this moving average of 340. So if you're not committed to MasterCard, sell it if it breaks this area. And then, you know, if you are in it and you want to buy more, maybe this 340. But those are your two areas.
That's a good stock in a rough sector. What about a rough stock in a good sector? And that's Lululemon not holding up well. Is this a good short as retail might come under some pressure, or at least some scrutiny this week?
It's had to move down. It's lost its momentum. I didn't see the chart for the last 2 days or so, so I want to take a quick look. Here is the resistance. Couldn't get through this downtrend. All this high, lower high, coming down. I would think that at this point it's opening lower. I wouldn't be shorting it here. Some people might be looking to buy it around this 44. I think that's just an important area if you're a long-term holder to watch. If it breaks below that, then it's really out of favor.
And I guess my last question here, sort of wrapping it up, is that when you want to have some safety, do you want to be in cash? I mean, how much of your percentage do you need to be there in cash just in case?
I think right now you should be at least 40% cash, at least. And that's if you're a macro long-term holder. For me, I'm in 100% cash because I'm a momentum trader. And when momentum leaves and the trend changes, I get back to cash. If all of a sudden we get a new pattern, I'll start putting some cash to work and I'll try and let the market make me money besides just cash flow. It's all based on your time horizons. Hopefully you sold some last week and now you have some cash. You might test the waters today, but this isn't a day to use all your cash because we don't know where that support level is going to be. You always want to have some cash on hand. You always want to be somewhat hedged. But most important, you want to feel comfortable.
Right.
The market's here to make you money, not here to have you think like you need to jump off a bridge at all times.
And also I think a good thing to take away from our show today is that there is an opportunity today. You don't have to come in and be totally freaked out. Today can be a really good opportunity.
Yes, for those that embrace volatility and watch a show and maneuver the market for cash flow and got out last Wednesday, you just saved yourself 5-6% or so. So this is an area to look at. If you sold, even some people even sold into that 1292 because remember the whole target was 1250 to 1300. We went to 1292. You're allowed to sell into strength. You're allowed to sell into excitement. One of the rules is you don't chase excitement. The same way on days like today, you don't sell into fear. So use those rules and you'll always be in a better position than if you go against them.
All right, well that's it for us for today. So everyone look for the opportunities. I'm Alix Steele from the street.
And I'm Scott Redler, Chief Strategic Officer at T3Live. Follow us on the virtual trade floor. These are one of those days you want to listen to us on the radio, find the relative strength if there is any, and then tune in for the recap and we'll let you know what took place.